Hey, on today's podcast, we are jumping into the market from an appraiser's perspective, specifically Central North Carolina. It's real easy to get national data. We're going to be talking local, so stay tuned.
Hey guys, welcome to The Buzz, Coffee and Real Estate. We've got Amos Archer. He's one of the appraisers here in Burlington. We're going to have him kind of give us some insight into the local market, what's happening, what are we seeing over the last 12 months. So can you just kind of give us a snapshot from your perspective of what's kind of going on there?
It's pure chaos.
Yes, we feel that. Yes.
No, so I would say things have essentially leveled off. I think we've had a stable market now fully for a year. I think our market here in kind of Central North Carolina seems to have peaked in probably June of 22, and then still remained high. I don't think it's declined, but it may. The analogy I use is if you were to hold a beach ball underneath a pool and then let go of it, it would shoot up past the surface and then come back down and land. I think June was when it kind of shot out of the water, came back down, landed, in the sense that after June of 22, people were no longer fighting with each other in such a way that it continued to cause the prices to increase. And as a result, they kind of settled. They didn't really decline, but they did kind of find this flat line, more or less. So that's the general principle that I'm applying to our market. Gotcha. That being said, it seems like homes that are above $400,000 or $500,000 are really kind of struggling. Those days on market are beginning to increase. They're still below 3 months, which means that even though we might look at that and be like, man, things are way slower than they were, it's still a very good market. Good time to sell your house.
So you're saying that 3-month marker is sort of an indicator of a balanced market?
Or even a little, like I would say that supply and demand seem to be more or less in balance, but I would associate a truly balanced market with a marketing time that's 3 to 6 months even.
Okay.
So I feel like we're still on the side of things where we could be like, hey, this market could go back to increasing at any moment. However, because of the interest rates, and here, honestly, this being August of 23, I feel like demand has dropped way down for my line of work, whether that's home equity, purchase, refinance, anything, because of how high the interest rates are. So that may actually take us in another direction, potentially even soon. But right now, things seem pretty stable. The larger homes that are kind of at the higher end of our price point here in the Alamance, Guilford, Orange County areas, that seems to be taking longer to sell than your homes over here that are smaller.
Yeah, 200, 300,000.
Well, it seems like that several years ago we had it heat up starting with the first-time home buyers, and then the heat just went all the way up through the market. I remember us having a $1 million buyer, and a $1 million home hits the market, sells for over list price with multiple offers in 4 days, which was the same thing we were seeing at the $200,000 mark. And so the heat went all the way up through the market. June being that beach ball that shoots out of the water, and then it seems to have cooled back down the same direction. But I mean, still those what I would call first-time home buyer homes, anywhere from the $200,000 to $300,000 range in this area. I mean, we still, if we don't get to the house pretty quickly, it's gone. So it's not like those are sitting on the market.
Yeah, within the last 2 to 3 months, I've still seen multiple offer situations that I'm being made aware of, and I don't really need to know that for my line of work. So I know that those are out there. Yesterday, I appraised a house that had an appraisal waiver, which is a sign that they expected it to be bid up beyond what they thought the market could support.
Appraisal gap addendums, we did a separate video explaining what those are. That's what you're talking about, right?
Yes.
So they're waiving a low appraisal up to a certain amount.
Yes.
Gotcha. Okay. All right, so you're still seeing those every once in a while.
Every once in a while.
Okay.
They're not as common as they were a year ago, but they're still out there in certain scenarios. For that particular property, I suspect that the listing agent purposefully put it out there a little low, knowing that there was enough demand at that price point for it to get bid up. And it got bid up, honestly, to exactly where the market seemed to indicate it should be.
Oh, wow.
But they included that appraisal waiver because there weren't great comps for it. So that was a pretty smart move. I think when you're talking homes that are from, let's say, 0 to 1,500 square feet, they're still getting fought over. Those are the ones that are going quick. But I think the interesting thing from a completely nerdy perspective is that price point for those smaller homes, I would say you might be able to argue it's still rising, whereas things are overall stable, potentially because these larger homes are having to sit or even come down a little bit. So it's not a perfectly stable market. But these smaller homes, the price has gotten to the point where you might be spending, let's say for the sake of example, not referring to any specific home, $350,000 for a 1,300 square foot home. Well, for $100,000 more, which is a lot of money, but still, depending on what your credit is and your purchasing capability, for $100,000 more, you might be able to get 2 or 3 times that square footage in pretty much the same city, maybe even not that far distant from that one home. So I do think that there's an imbalance there that probably has to get worked out. Either these larger homes go up again, or these smaller homes hold steady or decline, or who knows?
Let me ask you this. I've just not seen a lot of builders, new home builders, that have come in and built 1,200 to 1,700 square foot homes. It seems like that the new home builders have found their magic price point at about 18 to 2,700 square feet. And so I wonder if maybe those smaller square footages are still rising in value because you've not had this glut of new construction that's finally gotten back up online. We're so thankful for it, but there's not really a whole lot of new construction in those square footage. So if we have a buyer that's coming in that's saying, oh, this is all I need, then what you're saying is you're actually buying at a size point that is the smallest supply in the whole market, which means you're paying dramatically more for the same square footage that you would be.
Right. Yeah. We do not have we do not have a situation, I guess, in our area that is primed to really settle down because we've got industry still coming in. We've got the mega site in Liberty. We've got big businesses coming to RDU in Greensboro. So, and you know, we're in Alamance County. We're smack in the middle of all of it.
Yeah. I mean, honestly, that 40-mile stretch there between you know, your Greensboro and your Raleigh, and when you have announcements from Facebook Meta saying, "Oh yeah, we're coming to the RDU area," it's like, okay, it feels like that the demand for housing is going to continue to stay pretty high.
Yeah, and I think that's. We may see, I think that people get spooked by what's happening nationally, and we may see this slowdown continue as far as demand and home values thanks to what people can afford. However, I don't think that we go the opposite direction here because we've still got people coming in to the state who are like, I need a place to live, and frankly, this little area provides easy access to those places of employment, but also has been some of the lower price points in our region. Now, I don't think that we're one of the lower price points anymore. I'd say we're probably fairly even with these other areas, and that probably needed to happen. But I don't think that we revert. I've heard people say, you know it's going to come down, and I don't know it's going to come down. I don't necessarily see those signs for us. Nationally, sure, maybe it does. And I think you actually see that in certain markets. But I don't know that that's true of North Carolina.
Wow. So what you're saying is that we were kind of in balance for so long that we're now catching up to what normal should have been across the board. Because I know we felt that with the Raleigh market. Like we'd go into Raleigh and we'd list a house and we're like, gosh, this is $400,000. And we look in Burlington, it's like, oh, this is $200,000. You know, it's this big.
So it was actually they were a good deal.
Yeah.
And now they're just coming up to probably what they should have been, sort of. Yeah, which, you know, is freaking out all the small town folks out.
Yeah.
Because it feels like you're paying an arm and a leg until you start saying, yeah, but do you understand what half that house costs in Raleigh or Chapel Hill or Carrboro or Mooresville or any of those places? Yeah.
Yeah, the impact of inflation on home prices, I think it kind of remains to be seen. But, you know, I feel bad for people that do not own a home yet, just because of how much it has gone up in our area. If you've got a number in your mind from 3 years ago, that's really not feasible for our particular area anymore.
Yeah.
It's become challenging, and so to an earlier point, we don't have those smaller homes. I think potentially that's why we see so many apartments coming up in our area.
Yeah.
But it's also a potential area that, I don't know, somebody smarter than me that does market studies could probably figure out. There's probably a pretty strong argument to be made that we should be building those smaller homes.
Well, and I've heard some people say zoning is some of the main things that holds it back, because it's one thing to build a 1,200 square foot house. A builder can't make as much profit on that unless they can pack them in tight. So then all of a sudden you've got density problems with setbacks. So anyway, there is a kind of a multifaceted, it's not just, why won't some of them builders come in and build me a first-time home buyer house I can afford? Yes, they want to. You know, if there's money to be made, they want to do it. So I think jumping through, making some of those, because we've had small town laws too. You know, large lots, you know, to keep the density away, and now some of these municipalities, I think, are having to come in and say, well, gosh, we've priced a lot of our folks out of the market because it's no longer a legitimate incentive for a first-time home buyer or for a builder to build a first-time home buyer house.
That's true. Yeah.
Well, I mean, you see that too. I mean, you go back and look at, you know, Wade Journey or a Century Complete or something like that. Their bread and butter were, you know, 100 to 200 range. Now they don't even make those homes anymore. Now they're 300s and up. You know, and they've done a lot of that. With, I mean, I remember that was like, for me, especially first time coming into real estate, it was like, man, all we worked with was first time home buyers. I sold 50 of those homes. You know, it was like everybody gets a home, you know? And now it's like, man, how do I even find that?
When I first moved to Burlington in 2009, I was trying to decide, am I going to stay here? Should I buy a home? And ultimately I didn't, and I kick myself for that every day. But I had a woman tell me, she was like, you know, you can buy a lot of home here for $100,000. And at the time I thought, that is so much money.
Yeah.
But now I look back, I'm like, if I had a crystal ball, I would have bought 8 houses for $100,000.
Well, so I know you've said how a lot of the area has begun to adjust, but do you still see little pockets, little zip codes, little towns? If you had a best buddy of yours coming in from out of state, hey, I'm on a limited budget, where would you say, like, hey, this pocket right here might actually still be halfway decent?
Or maybe lower than the norm.
Lower than the norm. I don't know. I really don't know. At least not. I would say probably if, you know, the more rural that you get, you might find, because I think you weed out some of your competition if you're willing to drive farther, if you're willing to live in Caswell County or certain parts of Chatham County. If you're willing to drive down a dirt road for a while every day, that may weed out some of that competition. But I don't know that there's a specific area that's still like the most affordable area in our location. It's really just kind of what you're willing to put up with in your commute.
Yeah. Yeah, I know we had a home listed in Eden recently, and we had another one coming up, you know, pretty far north. And I was shocked, you know, but Eden is off the beaten path, you know, and now you can still get stuff for under $200,000. And of course, if you have a seller, they're kind of disappointed that they're not getting the Greensboro zip code, you know, rates for their houses. But even then, though, you're shooting 40 minutes down Highway 29, you know, to try to get into the city. So I know there for a while it seemed like McLeansville was kind of a little pocket. I'm not even sure whether that exists much anymore. Anything east-west, we've gone from Greensboro all the way to Hillsboro. It's just there's no real rural close to the interstate anymore. all of that now has popped up. So you got to go sort of north or south, get off the interstate.
Yeah, and I would say, there's no. I would say that that's probably a sign that this growth has been healthy. Like we're not kind of a flash in the pan. Oh, everybody wants to be in this trendy spot because it's trendy. It's like this was a genuine need here that has driven values up across the board.
Wow.
And it's not been because of some specialized market force, but it's more like we're all having to deal with this, and so it's raised everything.
Okay, that makes sense. Well, I remember seeing the statistics on the corridor for what they called like a mega growth corridor, which basically stretched from Raleigh all the way to Atlanta over 50 years. And this was back before we're talking 10, 15, 20 years ago that they already had listed out that corridor just based on, all the different complicated factors that are kind of above my pay grade. But I remember looking at that and thinking, okay, this makes sense. So what you're saying is the growth has been a legitimate growth instead of something that we're going to see as collapse tomorrow.
Correct.
Yeah.
Correct.
Yeah.
Unless everything collapses, I don't think we collapse.
Gotcha.
Yeah. So I would say if you could say something, because I have these conversations, I'm sure you do too, where you have somebody who asks the question. So what do you think is going to happen in the next 5 years? Do you think we're going to have the economic collapse? Is this going to happen? All those things. What would you say to those questions?
I mean,
I
don't have a crystal ball.
That's right.
I think I always start that way.
Yeah.
Barring, a 9/11 type economic event. Not that was an economic event, but the impact.
Yeah, sure.
Nobody could have predicted that. So barring that, I think that our area is on a trajectory to keep growing. I think eventually people will be like, okay, where's the next spot to move to?
Yeah.
But unless we went through some sort of economic collapse here, I don't see things going anywhere but up for this area.
Gotcha.
I think that we've reached a new kind of baseline for home values. I don't think that they go below that. And then I think on top of that, they continue to rise gradually.
Gotcha.
That would be my prediction for the future.
Some kind of normalized, what would you say is a normal kind of increase? 3%?
I don't have the data on that.
Okay.
I mean, probably between 1% and 3% a year.
Okay.
Maybe. I
Give
don't
or
know.
take.
I mean, real estate has always functioned as an inflation hedge, which means it typically adjusts about the rate of inflation and maybe a little bit more. But we just got to see 20%, year over year growth during that craziness, which was unsustainable. We're glad we're not in that anymore. But everything that I've seen kind of lines up with what you're saying, which seems to have stabled off, but still in certain price points, growing, but not like it was before.
Yeah. I do not foresee just a horrific future.
Yeah.
Again, barring the unforeseen.
Sure. I mean, do you see that we'll probably have some foreclosure increase? Do you think that'll be something that'll happen? I mean, most people have so much equity at this point that have been in homes, whereas 2008 we didn't.
So this is actually where kind of my line of thought has gone lately.
Yeah.
Now I'm also not doing very many appraisals right now, so I'm thinking about where will I start? Like, what will be the thing that begins them again? In when home prices kind of hit their peak in 2008, and then the market collapsed, appraisers didn't have any work for a minute.
Yeah.
To the point that they were like shutting up shop and going to work for Pizza Hut or wherever.
Yeah.
Then the financial crisis really kind of caught up to foreclosures. We had a huge foreclosure crisis, and appraisers were just in the thick of it, appraising all of these homes for banks that were like, what's my loss here? So although foreclosures are not good for individuals or the economy in general, they're pretty good for appraisers. So I've been like, hey, is this going to happen? And my answer is really, I doubt it. I think that they will happen here and there. But because people have a lot of home equity and also because there's still strong demand, when a foreclosure does occur, it'll get snapped up really quickly. And for most people, unless they have just a crazy amount of debt or something really weird has happened to them, then they would be able to sell that property before it would ever get to the foreclosed place.
Status. Do you, this would be kind of on the cusp of that is, I mean, you see all of these big companies like Zillow or Redfin or something that have bought up all of these homes. At some point, they'll have to offload. Do you think that they will have to take hits, or do you think that they'll probably just hold until?
I think currently they're taking hits.
Yeah.
Some of the previous sales that I'm seeing, buying a home for $300,000 and selling it for $290,000. It appears that they've overshot the mark a little bit, but maybe they just bought kind of at that peak and are now just cutting their losses.
Gotcha.
There's a strong rental industry out there right now.
Yes.
They could rent them and
Yeah.
be fine and just bide their time.
Gotcha.
I don't. Now, what really makes me curious I've done a lot of work for some investors that have bought up a lot of homes and then refinanced them once they've remodeled them. They're sitting on all these assets. And I'm looking at it going, okay, but what if this person went bankrupt?
Mm-hmm.
Then all of a sudden you would have 300 homes in the market that needed to be sold.
Yeah.
That's more of where I think we could get into some interesting scenarios if an investor actually went under.
Gotcha.
But right now we're not seeing it.
I gotcha. Okay.
I know we've said for a year or two now, man, if we could see a good 300,000 or 300 foreclosures hit tomorrow, they'd last about 30 days and be gone.
Yeah.
You know, it would be it'd be a drop in the pan. And so, yeah, for at least in this area,
Yeah.
I'm completely agreeing with what you're saying there.
Yeah.
Now, on the other hand, there was some report the other day that credit card debt had just hit something like $17 trillion.
You must have watched our video.
Yeah. No, I think it was credit card hit the $1 trillion and total consumer debt was at that 17. Yeah, we were trying to even describe how much $1 trillion is, and it boggles my mind.
Yeah.
So if everybody's loans that have been deferred because of COVID now kind of come back and they are now feeling the full effects of inflation, everything I said could be wrong. Maybe we do hit that foreclosure crisis, but I sincerely think that you could sell them before you would hit it.
Yeah. I think people would probably panic and sell out and pocket the money versus losing it all.
Yeah.
Yeah.
Which would still stabilize or drive the market down a little bit, but it just doesn't sound like that we see
Massive
at least in
drops.
this area,
probably
a huge foreclosure crisis hit.
We went up 20-25% year over year. We would not go back down 20-25% year over year.
Yeah.
Maybe we'd go down 5-10%.
Yeah.
I say without a crystal ball or
Sure.
any data to back that up.
Well, it's like you said, you would have to have a massive amount of market change for it to be. I mean, you'd have to be appraising homes 50 grand under, like continually every time for that to be like, boom, now all of a sudden we've got this massive drop.
Yeah.
And I think that's what the misconception. I was talking to a guy the other day. I was leaving the office and he was talking to me. He said, when do you think the bottom's going to fall out? And I'm like, the bottom's not going to, I mean, even if the bottom fell out, it would take years for it to actually get to the place where we would feel that hit so hard. 2008, it was, there was a massive downturn. You say all these banks are closing, all these houses are being sold off. People are just, like I was watching, I think The Big Short, and it's like people just left the house. They're like, I don't know what to do. I'm just leaving, packing up, So totally different concepts than what we would see now. So
Yeah, for sure.
Yeah.
Well, once again, it has been a pleasure having you, picking your brain a little bit, and thanks so much for the time and for the series
Thanks
here.
for having me.
Yeah, and I hope you've enjoyed it. For all of you nerds out there, and we did several other videos with Amos, so tune in, get an idea of what appraisers do, how they do it, and then also some crazy stories that I think we'll have coming out soon. So anyway, talk to you soon.
Yeah. Subscribe to the channel, drop a like in there, share this with somebody that is interested in this information, and we'll see you guys in the next video.